Hello everyone, and thank you for watching. I am pleased to present Galp's results for 2024, particularly so as this was a year of consistent delivery at or above headline guidance across all business units. Let me start with Upstream and Industrial, both showcasing very solid production levels, 109,000 oil barrels per day in Brazil, and a record high of 91 million barrels processed in the Sines refinery. Midstream and Commercial once again proved to be important contributors to Galp results, building on a more flexible commodities portfolio and steadily delivering a robust downstream transformation journey. Finally, Renewables and New Businesses developments adjusted pace to continue to deliver on our strategy whilst demonstrating our financial discipline and acknowledging market conditions. Overall, in 2024, Group EBITDA reached 3.3 billion euros, with an operating cash flow coming in at 2.1 billion euros, both surpassing our guidance. Under a less supportive macro environment versus 2023, we delivered a stable free cash flow of 1.3 billion euros, balancing inflows from the divestment of non-core assets with strong execution in our growth projects. This performance allowed Galp to further reinforce its financial position, reducing net debt versus 2023, even after competitive distributions to shareholders. Now, looking at operational execution, 2024 was indeed a year of strong delivery, but also a year that laid foundations for future growth and value creation. In Upstream, we saw important discoveries in Namibia, having safely drilled 4 wells to explore and appraise a first hub in the northwest region of the Mopane complex. This was a remarkable, safely delivered accomplishment from the teams. As we collect and analyze all the data from this campaign, the team is now focused on maturing the understanding of this first hub and on delivering the development concept anchored on AVO1. Already in 2025, we are drilling a 5th well, Mopane 3X, this time on the southeast region of Mopane. We expect results still this month and will then integrate all acquired data to support the definition of our next steps. Still on Upstream, but now in Brazil, the Bacalhau project progressed and the FPSO sailed as planned at the end of 2024. There are still works to be done on the unit for the startup later this year, besides commissioning, mooring and connection activities. Once at plateau, Bacalhau will contribute 40,000 barrels net to Galp, or more importantly, over $400 million annually to our operating cash generation. Group production in 2025 is expected at or above 105,000 barrels per day, just slightly down year on year, reflecting one-off maintenance. For 2026, we expect normalized operations to drive production back up. Now, looking at Industrial, after the high availabilities in 2024, we will have planned turnaround in the atmospheric distillation unit in the 4th quarter of 2025. And as for the execution of the SAF HVO and the H2 low-carbon projects, 95% of the contracting is done and the site is in full mobilization. The team is focused on the safe execution of these projects, aiming to start commercial operations in 2026. Midstream, steady delivery and portfolio optimization continued throughout 2024 and will remain a priority in 2025, as we will selectively explore opportunities such as expanding our gas footprint in Brazil. In Commercial, Galp has been driving a lean business, progressively remodeling our network while increasing our convenience and energy solutions offering. And finally, in Renewables, the execution pace now reflects our discipline and has been adapted to prevailing market conditions. We will continue to roll our organic pipeline of solar projects and to look forward for further options in storage and in hybridization. Looking ahead into 2025 and 2026, we expect a weaker macro deck in year-on-year in 2025. Together with the one-off planned maintenance activities in Upstream and Refining, this will land expected EBITDA at above 2.5 billion euros and OCF at over 1.6 billion euros. For 2026, with less macro headwind, normalized maintenance levels, and the additional volumes from Bacalhau, we expect OCF at around 2.6 billion euros, a 20% increase versus our 2024 performance. Still for the 2025-26 period, we revised downwards our net capex needs, focusing on disciplined and considered inflows from divestments. Our average net spending for 2025 and 2026 is now expected below 800 million euros per year. Around 65 of our gross capex will continue to be directed towards growth and transformation. Overall, growth continues to be the hallmark of Galp's portfolio. The increased visibility on the upcoming projects and a disciplined approach towards a low capital intensity plan supports the Board of Directors' confidence to upgrade our cash dividend base. Hence, the Board will propose the next AGM a 15% DPS increase to 0.62 per share, whilst maintaining our 1/3 of OCF headline for total shareholder distributions. This then translates into a buyback program of 250 million euros to be commenced shortly. A final word on our current governance to emphasize strategic continuity and execution focus. We have great people and the board's support. Together with my co-CEO, João Diogo, I look forward to deliver on Galp's unique investment case in the year ahead. Thank you for watching.